Hi folks, Scott here, and this is the wrap for Thursday, May 9th. So if you look at the dailies here, you see a couple things. We put in a new 200-day high print, right? See the wick there above the prior day's 200 days highs. But we closed lower, the red candlestick. We closed below yesterday's close price. So I'm going to show you the results of fading gaps following a 200-day high that did not end in with a 200-day high close, and specifically following a 200-day high close. Okay, so we tested the highs, broke through them from the prior day, but closed lower. I'll use GapTrader, my back testing tool. And whoops, there it is. So this shows odds favor a gap up the next day after a lower close following a 200-day high. But the sample size is too small. And in fact, I just ran another study in our trading room at the end of the day that actually favored a gap down tomorrow. So this is not nearly robust enough to assess where we may gap. The worksheet actually does a pretty good job of that. If you want to look at the opening gap area probabilities on the worksheet. So, and that's what I'll do before making judgments like that. But what this shows is that 8 of 12 down gaps using an end of the day stop had filled their gaps and been profitable historically. Decent sized win as well. Without any giant losers either. That's an end of day stop. Now, how much heat would you have taken? Max trade drawdown. You'd have been down, divide this number by 500. So you'd see you would have been down about 10 points intraday before you ended up down 2,500 or less. I don't know for a fact that the same trade, but that's some interesting information. And a gap up is just a neutral setup. Now, I did run these numbers already for our members and showing with our MTG stop parameters, which I will save that for them. That's one of the benefits of being a member. But it did show both up and down gaps having some decent likelihood of volatility after the open. So don't get too excited about buying a down gap. Now I'm not going to shy away from it either. I'll wait and defer to our gap guides and my other analysis in the morning before I make a final decision. But I'd still favor a gap down filling for tomorrow, and a gap up looks okay. All right, let's look at what today the worksheet showed. We gapped down between the close and the low of the markets. Now, this is the opening area. The two different zones. If you look at our gap zone map, which is available on our homepage under free info, you'll see, you'll know what I mean. There's two zones here, UCO and UOL. So you have to look at the individual gap guides for today, and that's what I did, and they looked pretty darn good. Let me show you very quickly. UCO zone. We opened between yesterday's close and open. 73% win rate, 1.4 profit factor. Check. YM, same for the weighted average of my three systems. NASDAQ neutral, Russell neutral. Looking at the ETFs. Good habit to check everything. Spider, check. Time is check. That's 4. Q's, check. 5 of 8 met my criteria, and then the Russell was neutral. So 5 strong, solid setups, 3 that were neutral. On the worksheet, which I didn't point out, but there were no unique day risk factors or positives, nor unique patterns that were good or bad either. So as I size it up, there were some other positives here in play. You can read that at your own leisure. The only real risk was this first half of May down risk, which is not a large sample size at all. And because I'm in a drawdown, as I've mentioned this week, I have to use a tighter standard. So what I decided to do, I trade the UCO zone, but we had to be above the high of 2 days prior. That's my heat gap setup. You can probably Google that and find some videos or articles I've written on it, or members. It's in the members download area. And I wanted at least 2 points of opportunity. So had to be in this 4-point window, and I thought we were going to actually open here. I was writing this at 8:50 because I did a presentation for TradeStation. Unfortunately, and I was going to use half size, slightly bigger stop because it's a heat gap, prone to taking heat, or also known as adverse excursion. And as it turned out, markets rallied, unfortunately, into the open. And let me show you where they opened. Opened with a let's see, what is that? A 1-point gap down, roughly. So not big enough for me, no trade for me, missed a small win. Some folks did get in early. That's one of the benefits of my information being shared. You can do that. It's not my style. I like to wait for the open when the volume picks up, but some people did catch a winner. The 15-minute guides favored high fade and low fade, and for me, that just means the market's a little bit too confused, and I'm not going to bet and gamble on it, so I passed on that. And first hour guides favored the low fade. I'll show you that super quickly. Whoops. And low fade favored right here, 61.2. Strong numbers in the YM, strong numbers in NASDAQ. Neutral in the Russell. So 3 of the 4 futures, the ETFs. Spider confirmed. Diamonds lean that way. Qs lean that way. Russell, you can maybe argue, lean that way. Not overly strong, but the advanced studies also showed some positives as well. We're in a raging bull market. I wanted to get long, and we had the heat gap set up. Even though the gap had already filled, it's still a bullish momentum pattern. I wanted to get long, so I set up the low fade. In fact, I set up a low fade 2 ticks above the first hour low. First hour low was 1623.75, so instead of setting it up textbook per the guides of 1624, I went in at 1624.25, and I kid you not, missed me by another stinking tick. Check that out. Meaning yesterday was one of those days where a tick mattered. Low was 24.50. Thought it might get me down here or over here, never did. Missed me by 2 ticks in each of the scenarios, and then it rallied. So when I checked on my trade in the afternoon after lunch, I was disappointed it had not been filled and had missed a winner by a tick to the long side. So guess what I did that was a rookie mistake. I don't normally trade in the middle of the day, but I was feeling a little bit sorry for myself, having seen the gap melt away, having seen yet another long trade miss filling me and become a winner. I decided to set up a buy order. It was trading up here. I guess it was close to 2, and 2 is prone to be to not work on breakouts, so I didn't want to chase. But I thought we'd get a little bit of pullback around 2 o'clock. To 1629.75, 1 tick above the highs. I set up a buy order. Discretionary trade, purely discretionary, no probabilities. In fact, the range guys did not favor the high breakout. Didn't mean there was bad negative either. So I set up my order, got stopped minus 3 points on discretionary trade. So a little frustrating again. But that's trading. And the one thing I will say, and I probably don't represent myself well, if you watch closely what I'm doing, I've done this a long time. I have losing days like anyone. But it's rare for me to have big losing days because I close shop. I don't sit there and keep throwing money at the market when I'm just not in sync. My confidence is a little bit off. That's the key for me. So I dabble, got my nose bloody. That was enough. Tomorrow's another day. So my confidence is still in place, and we'll just continue to follow the odds and not trade too many discretionary trades. So there you go. That was my day, and that is the wrap for Thursday, May 9th.